Good afternoon, everybody, and welcome. I'm pleased to welcome you to the panel on the future of financial market infrastructure. I'd like to start by just introducing our very distinguished guests that we've got here in the room today, all of whom I'm very happy to say that I've worked with over the last few years and had some amazing experiences in the digital space. So I'll start on the far side with Chong, CEO of AsiaNext, and followed by Tom Menner, who's the CTO of SBI Digital Markets, Jorgen, Ouaknine, who is the Head of Innovation and Digital Assets at Euroclear, and finally Jennifer Peve, who is an advisor to Chainlink, but formerly Head of Innovation and Strategy at DTCC. So I'll start by asking everybody to introduce themselves and telling us a little bit about what they do, and then we'll get right into the meat of the session. To Jennifer first.
Oh, great. Thank you very much, and good afternoon, everyone. Jennifer Peve. I am a global financial markets expert and leader. I have 30 years experience in the industry, of which about half has been spent at two large US FMIs, one being CME Group and the other DTCC. And I've been pretty lucky and excited to be here today, but I've spent a lot of my career building new business solutions, all with an understanding of the value and the impact of new technology solutions and how they can help organizations and deliver better solutions for clients. So very excited to talk about blockchain and digital assets today.
Hi, everyone. So I'm Jorgen Ouaknine. I'm the Global Head of Innovation and Digital Assets for Euroclear. So for those who are not very familiar with Euroclear, it's a financial market infrastructure. For half of the people in this room, we should not be here, and for the other half of the people in the room, they understand that we have like 40 trillion of euro of assets under custody, and like this is a big part of the game. So yeah, we're doing innovation, we're doing digital assets. We have been supporting the growth of the capital market for over 5 decades, and guess what? We'll be here over the next 5 decades. So happy to discuss.
Okay, thank you. Good afternoon, everyone. My name is Tom Menner. Again, I'm the CTO for a company called SBI Digital Markets. I like to remind folks that SBI is a financial conglomerate based in Japan. It is not the State Bank of India, so I always need to point that out. We're based in Singapore, and our focus is on digital assets, very specifically for capital markets, particularly at the institutional level. Historically, I had a long career at IBM, which is how I got involved with blockchain through Hyperledger and Hyperledger Fabric back in the early days. From there, I went to R3, where I worked directly with Angie, and my very first project I worked on was with Jennifer over at DTCC. And as part of the SBI family, Koki, who you'll hear from in a moment, is one of my sister companies. So the only one who's escaped my clutches so far is Jorgen, but I'm looking forward to putting him in my portfolio sooner or later. Thank you.
We're built on R3, so we might have had a chance to work together. So.
And I'm Chong, the CEO for AsiaNext. As you heard from Tom, we have two shareholders, one of which is SBI in Japan, a financial conglomerate, very active in the digital asset space. The other shareholder is the SIX, which is the Swiss Stock Exchange, which also has a digital asset exchange as well called SDX. So AsiaNext is created out of these two shareholders in Singapore. We have been existing for about 3 years now, building our ecosystem of digital asset exchanges. We have 3 exchanges now. One is the crypto derivative exchange, and then the spot exchange, as well as the STO exchange. Yeah. So my background is banking and capital markets. Thank you.
I do feel very privileged to be in the room with so many distinguished people, and I tried to add up the number of years that we'd collectively served between us in capital markets, and I stopped after we passed 100, so but most of that was probably mine. Anyway, okay, textbook question to get us all started in that starting blocks. Financial market infrastructure, by definition, plays a very vital role in the capital markets and TradFi ecosystem. What macro trends do you see in the evolution of your roles as individual organizations and crucial financial market infrastructures as part of your adoption of decentralized type blockchain-based assets and workflows? So I'll start that question with Jorgen, if you don't mind.
So, we are an incumbent, and as I mentioned, we have been around for almost 60 years, and there are a lot of things that are changing, but if we try to focus a little bit on what will not change in the future, that might be a solid foundation to actually build on. And there are a few things that have happened in the past, will continue to happen in the future, and that makes our role quite critical. Is first of all the trust people put in our institution, and somehow blockchain was created at the beginning to disrupt trust, and we are the physical representation of that trust. We represent that trust not only with the assets that we have, with what we bring to the market, and how we support the overall growth. So we recognize as well that the role we are playing today is not going to be the role we are going to play in 5 to 10 years. So we have to change, and we have to transform from inside, but we have to as well appreciate the fact that we are part of an ecosystem. And if the ecosystem doesn't move together, then you might be far ahead but alone, or far behind, which would be the worst situation. So everything we do basically is focusing on innovation, not as tech enthusiast per se, but mainly leveraging the tech to support the business evolution. What will that enable us? What kind of new capabilities will that help us? What kind of new business model do we have to define around all this new technology? Should it be AI, DLT, and all the trends? We don't believe there is one silver bullet to everything, but we have to be at the forefront of that. We have to be the change agent, and we do that together with our clients.
Jennifer, given your experience over the last 8 or 9 years, it'd be great to get your perspective.
Sure. So I'll echo Jorgen's comments with regards to what financial market infrastructures provide to the industry. They ultimately will never give up the fact that they are, bring the safety, soundness, and resiliency to our markets today. And I think as most of the players in the ecosystem appreciate that role that they play. And so, and the other thing I'll mention is, over 50 years for Euroclear, I know DTCC has had a 50-year anniversary as well. As you think about the decades that these institutions have behind them, they've also built and innovated and changed with new and evolving technologies. So AI, when it came out with algorithmic trading, different financial market infrastructures would create data centers that were closer to the exchanges to help with latency problems. Like there's always been some innovation that these market infrastructures have evolved around. I think what's going to be really important to watch in the next decade or so is how these market infrastructures now, with such legacy and histories behind them, how they actually evolve and whether they start to diversify, become more global, how they approach the markets, how they offer new services to their customers, and how quickly they can innovate in order to make an impact.
And Cocky and Tom, from a greenfield perspective, what's your view on how you address the imbalance?
From an exchange perspective, FMI perspective, I think blockchain, the trends around adoption does create a lot of possibilities in the post-trade side of things. Not yet the pre-trade, but eventually I think it will as well. But for now, I think there are a lot of efficiencies to be had in the post-trade, mainly because of ability to move assets and, fiat on-chain as well, whether it's electronic money or stable coins, eventually that partakes in this ecosystem. The ability to do DVP on-chain, atomic real-time, creates a lot of possibilities for us. Yeah.
So from a technical perspective, I'll take that point just because I can afford me to be a little bit heretical here. I don't think there's anything particularly magical about using blockchain as an infrastructure. From an abstract point of view, it's just essentially a distributed transactional database that allows counterparties to update those records. That being said, though, I think one of the key questions that is being answered is what gains can we see from the implementation of this technology? So on the one hand, you have cryptocurrencies, which are their very own asset class. But separate from that, within the FMIs, can we actually pull out operational efficiency with the use of this? And would it be pre-trade? Would it be post-trade? How do we handle custodial services? Is there some advantage in the sense from not just, let's say, from settlement and corporate actions, things like that, but can we introduce new asset classes? Of course, we talk about real-world assets and tokenization of those assets. Do these become assets that are of interest to investors? Is there a buy side for the things that we're actually creating? So I think there's a number of existential questions we have to answer in this space, but I think this is what's gotten people so excited, is that they see some real possibilities for growing this space.
And the next question, I want to just talk a little bit about how we prepare ourselves and how we might see the emerging roles of market participants within a digital world, if you like. And I say this from first-hand experience. One of the challenges I faced early on in my digital career with Tom was educating people. People needed to understand what do we mean by the use of blockchain, what do we mean by the use of tokenization of assets. So the question is, from an industry perspective, how do programs of work like Project Guardian, driven by Maz, and like projects like the BIS Agorá program, what important role do they play in helping us to understand potential future use cases in a digital world? How might that impact the roles of the actors and the participants that exist today? Because obviously we're going to see some changing roles as a result of some of these programs of work. And what would your takeaways be? And I certainly know that a number of you have been very actively involved in programs like Guardian. So I'll start first with that question for Koki.
Thank you. Yeah, I think the projects like Guardian and Agorá, there's globally well-known projects. These are initiatives that kind of stir the market's interest and educate the market on how regulators can stand behind private market participants to push the boundaries on blockchain adoption. The Project Guardian in particular deals with enhancing liquidity and efficiency on tokenization of real-world assets, and they have done a couple of pilots which are very successful. I think Guardian is moving towards global layer 1 in terms of the next phase of development. This will involve a lot more players and so-called the movers and shakers, right? Agorá doing the same thing with cross-border payments. I think these serve to give what I call conviction to the markets that regulators are behind it, the technology works. These are being deployed in real-world cases, right? So in terms of market participants like us, we kind of look at these projects and pilots as something that we want to participate in as well, because we want to be actively involved in reshaping market structure, giving solutions that fit what the market wants, especially in how TradFis adopt blockchain, right, in that space. So we want to be part of it, so that we, not left out in terms of the solutioning. Yeah.
Tom?
As Koki alluded to, actually, SBI, we've been involved with Project Guardian almost from the outset. The first couple iterations, we were directly involved. And we continue to be involved. You'll hear announcements at Singapore FinTech next week of some of the recent work that we've done, and of course the scope of Guardian has expanded. And as Angie well knows, when we were at R3, we were involved in quite a number of CBDC projects globally. I think one thing that's come out of this has been the question of what is the commercialization of these potential projects. So on the one hand, as Koki pointed out, we've demonstrated the technology works. We've demonstrated that it can do what it's supposed to do, whether we're talking about CBDC, whether we're talking about capital markets and various asset classes. But is this an improvement over existing FMIs? Is this an improvement over existing processes? Is it an improvement over, in the case of CBDC, retail cash or wholesale payment systems? So once again, I come back to these existential questions of, are we able to show or demonstrate some return on investment and some path to commercialization where somebody actually says, I've implemented this solution and I'm actually generating quite a bit of money, whether it's through operational efficiency or the introduction of new asset classes and new forms of trading.
Jorgen.
I would start with one of the key points you mentioned, Angie, is around education. And let me take you a vanilla example of bond issuance. I think this is the most vanilla you can get in terms of like doing something on DLT. But it serves several purposes. First of all, it's working well for 3 reasons. You have regulatory clarity around that. You have technology readiness as well, it's working. And you have some client demands. And all these 3 things allow you to actually progress further. And what's interesting is that as vanilla as it might be, it's something that is here for good. There's no going back on that, and it's a key milestone that everyone can build on. You don't need to demonstrate that again. So actually, it's a small step. Let's not fool ourselves. It's a small step, but it's actually a step that you can rely on solidly. And between the first issuances, where you had some challenging questions from the buy side, like, what's that about? Why should we be interested? And the liquidity is a challenge, etc. To the latest issuance you see where it's largely oversubscribed, and now it's become BAU for some investors. So the educational part of that plays a huge role, and we play a huge role in supporting the market there. And I would say, not to repeat what you said on ECHO and on Agorá and Guardian, we are part of that as well. It creates a great momentum in the market to discuss with central banks, looking at public and private partnerships, looking at the tech aspect, the regulatory aspect. Because at the end, when you talk about Agorá, what is Agorá? Is it an FMI? Is it a tech stack? Is it something? And this question will come more and more often. So thanks to all these projects, we are asking ourselves the right question from a capital market point of view to actually be able to progress, have great answer, and basically identify the missing points to have the three components that would allow us to scale and to more adoption and more scale, because there is not yet adoption and scale to the level it could or it should.
And given the point you made was very interesting. You said, given where you've got regulatory clarity, given where you've got client demand, and given we know the technology is perfectly capable of doing the things we're trying to get it to do, then the question then comes, and this is one for Jennifer, because I know Jennifer's lived in this world and has experienced this firsthand, so through the work that you've done at DTCC. Given these types of initiatives bring everybody together, we've got clear benefits. Why are they not moving towards adoption at the pace we thought they might? Is there, what's your experience of that? It would be great to hear your perspective.
Yeah, so this is something that I've talked about a lot. And one of the things that I also think are interesting about these public-private partnerships, I think they're really incredible for that education purpose. But one of the things that I've always just longed for is, who's going to have that private-public conversation around something where we really start to get to, look, this function no longer needs to exist, and therefore we're going more direct to the end user, or we're going more direct to the buy side, or something where you're now really shifting market structure change. That's going to be when I think it's going to get really, the conversation globally will get really interesting. To answer your question about adoption, though, I think there has been, globally speaking, everybody's moving at a different pace. And I think the reasons for that are, first and foremost, regulatory clarity. And what do I mean by that? Or asymmetry, to use your word, Angie, from earlier today. I think, ultimately, each jurisdiction has their own regulatory regimes, and they have different goals and objectives in those regimes. They have different methods. They've been around, they have different maturities in terms of the regulatory regimes. And so, that's issue number one, right? I was telling Alex earlier today, I said, it's funny, when you have a regulation in the US that actually lists the name of an FMI in its regulation, it makes it really difficult for somebody else to come along and do anything, right? It's very specific. And so I think that's number one. I said, the second one, I think you've got priorities, organizational and even FMI priorities. If you look at this past year, the U.S. moved to T1. I can tell you it was an all-consuming initiative, and it didn't just stop with the U.S. or North America. It's starting to bleed over into other countries, and so resources are having to be diverted and put towards those efforts. They're important efforts, but it's still resource and budget that's getting directed in a different place. I'd say that, aside from regulatory clarity, I think the market maturity in different countries and jurisdictions is also important to think about. None of this can be looked at on an apples-to-apples basis. In the U.S., you've got an FMI that is 50 years strong. In securities, you have FMIs in commodities and futures space as well, also very well entrenched, have been around for decades. And so, what happens to these organizations? They build their products and services and technology stacks over time, and it gets really hard to start to just replace things, right? We can't afford, the markets are really dependent upon these organizations to do what they do so well. We can't afford to have something just completely implode. So I think that's, whereas, in some other emerging markets, you might have, FMIs that are newly starting. And I think that's a great opportunity, because the old adage is it's easier to knock a house down than, and rebuild it than it is to remodel, right, for example. So, and going to that point, a lot of FMIs have modernization efforts going on, just kind of underpinning that, where, and again, this is on a global basis, modernization efforts to effectively, improve their platform so that they can continue to support the trillions of assets that are being processed today, but also position themselves to be able to bridge those traditional assets and digital assets in the future. So there's so much going on. It's not an easy answer, and I wish we want a silver bullet, but there's so much going on that's behind how we move this forward. I think it starts with some of these private-public conversations and projects, because it does bring to light a lot of the value that these initiatives can bring, and where you can start to see successes. So I look forward to seeing more of that, and again, having a little bit more challenge in the workflow and the life cycle management and the participants around the table, just to shake it up a little bit.
Yeah, indeed, and the bridging of traditional and digital assets, Jorgen knows very well indeed from the work that we've been doing on the DFMI over the last few years. So from your perspective, and you've got a big role to play in the existing world that continues its own journey. It's got its own momentum, which is huge as an international CSD. How do you feel adoption, so far and going forward has occurred from your perspective? I know that you've got a view on that.
Well, as I mentioned, adoption is absolutely not where it should be, but there's a way to get there. And, because we're at SmartCon here and we have had so many discussions with different kind of people. And looking at the front row, yesterday I had a chat with Prophet around how they operate nodes for Chainlinks. And it's a different kind of conversation. We have other conversation with other people talking to you about, they are going to do this data set on this smart contract or like that. And it's kind of very different and very focused. I see on the front row as well, everything around the LEI and the VLEI, that is start to become a standard. When you use words that everyone understands and know how it can be used, it's actually helping you progress. And that's exactly one of the works we have been doing with DTCC and Clearstream around the digital asset securities control principles. All the conversation we had made us come to a conclusion saying everyone is talking about the same story, but not from the same starting point. So people are talking about the vision there, but you need to get there. Some people are talking about what's happening tomorrow, today, but nobody has the same start of the story. And as regulated entity, I know that, we can see clearly now at SmartCon you have a capital market stage, you have a Web3 stage, and you see the conversion of both. And that's why we laid out 6 control principles that are important for financial market infrastructures. And these are things that are guiding the conversation that when you look at them, they clearly point out to some risks and to some controls that will mitigate these risks. And all that, is supporting the conversation moving forward. And we have seen many different companies of different nature just like posting part of that saying, you know what? When we interact with these FMIs, because they are somehow, people realize that they will not get rid of us in the morning, they would like to partner with us in the evening, and continue the conversation. And we have given them a roadmap to follow. It doesn't mean it's perfect, but this is serving a purpose, and we have to go there. It's kind of difficult to argue with the principle. You can always go down to this is missing, this is not perfect, and by choice, we decided to leave out the standards because this is something for the industry to build together. But questions like, are you regulated? What's your take on asset safekeeping? Are you resilient and secure? If these are already challenged, that makes the conversation much more difficult.
I'll just echo, one of the things that makes our financial markets work so well are these principles that on a global basis we all adhere to in some way, shape, or form. So I also really excited about the digital asset securities control principles because they do help that conversation along.
And we did start that together.
Yeah, actually DAS-CP is very much dear to my heart as well, because I think we're craving standardization, and not just standardization across existing ecosystems like Euroclear and DTCC, but also so that we can embrace standardization when we're bootstrapping new financial market infrastructures in the future. So listen, Cocky and Tom, I know from your point of view, you're bootstrapping new ecosystems. That is, without doubt, probably the hardest of all tasks. I mean, we recognize that. And I know in the case of Tom, you've got the heritage of SBI sitting behind you with a very large pre-existing ecosystem. So it'd be very good to get your view on how do you see adoption coming into it from a green field, and how much of your existing ecosystem, Tom, can you lean on in order to promote the services of SBI Digital Markets? So maybe start with Cocky first, because you're bootstrapping from scratch, and although you're backed by very significant financial market infrastructures, you're still having to start from the beginning. So it'd be great to get your view on that.
Yeah, thanks, Angie. Yeah, so the adoption, I would say, is for me like an evolution rather than a revolution. Obviously, if you're born out of the Web3 world, revolution happens every day, right, over that side of the world. But in the TradFi space, adoption of blockchain is more like an evolution. In our case, we're trying to bridge in between, to build a bridge between the current and the future for, traditional capital markets. We see the adoption as, a lot of people are interested, just trying to understand what it is. Atomic settlements, moving assets on-chain, tokenization. There are a lot of interested parties. Now, unfortunately, the world has been established for many, many decades and centuries. So the old world is not going to just shift over tomorrow. There's a lot at stake, for the board, for the regulators, and so on. So for us to convince our issuers, our members to onboard onto a tokenization platform to deliver, the solutions between investors and issuers, does take some time. And to the extent they are very comfortable with their existing solutions, there's no push factor. It's much like, when you attend universities, you can now go online and get a certificate. But would a lot of people just jump on it, even though it's cheaper? May not serve a lot of people's interest to just go online, right? But in time to come, even supermarket chains are going online to deliver their goods and sales. So I think, for me, it's an evolution, and I do see it in AsiaNext happening that way. Yeah.
I think the bridging comment is very interesting, because the bridges are going to become very important in how we link all this together. Tom?
So from my perspective, again, my interest is in the distribution of digital assets. And when we talked to clients a couple years ago, they had basically said, well, and this was institutional clients, by the way, they had said, well, if you're talking to me about tokenizing a bond just to get fractionalization effects, I'm not really interested in that. That's more for the retail market. I don't necessarily care about that. What I do care about is if you can open up new distribution channels for me, and if you can provide new possible asset class avenues for me. So it became clear that that should be our mission in life, is to focus on that distribution of assets. So to point Jennifer made earlier, I think the strength and at the same time the weakness of this story is the network effect. The value of putting together either a single public permissionless blockchain or multiple networks of blockchains that are interoperable is really the network effect that will drive this. It will drive the liquidity, will drive, I think, the adoption. People start to see value. If I can originate an asset in this, starting in this market, get it listed in these 2 or 3 markets, maybe via Cocky, it gets sold, gets custodied over in DTCC or wherever. I think that's the effects that we're looking for. At that same time, and the value that's coming from that, we're inhibited by the regulations. So the way that a token is treated in Singapore is different from the way it's treated in Switzerland, or maybe different in how it's treated in Japan or other jurisdictions. So, and what asset classes are allowed, what asset classes and how they operate, what those smart, and which would drive what those smart contracts look like. Is really very, very key. So as Jorgen mentioned, if standards help to drive some of that, if I can maybe have a metadata model of what represents an equity or fixed income asset and have that represented whether the jurisdiction is Singapore, Malaysia, Switzerland, the US, that helps quite a bit. Then the other problem that I have to solve as a technician is that interoperability. I can't necessarily assume that we're all sitting on Ethereum, for example, or that we're sitting on Ethereum variants. I need to be able to have those assets flow, ideally flow freely, that something originates with me, I can list it over on Koki's exchange, and then have it custodied maybe somewhere else. So that's, I think, part of the technical challenge, and as Jennifer mentioned, the regulatory challenge that I think has inhibited adoption.
If I may add to that, I think we're all excited about the arrival point, but there's a journey we have to go through. And the journey is long, the journey is expensive, and we have to celebrate the small wins we have in between, because let's face it, we're not going to go to the most exotic place tomorrow morning, and there's a way to get there. And I feel in the conversation we have in the market a lot of frustration. It's not going fast enough. We're not seeing enough value. We want everything now, otherwise we wouldn't be engaged. And then you got into the chicken and egg story. And if we all realize, to make a parallel, what the smartphone has brought to the phone, this is what the smart contract will bring to the contract. Nobody will argue that, or maybe people will argue that life with smartphone is better, but life tomorrow with smart contracts is definitely going to be better. But how much better, at which pace are we going to get there to get people excited? That's a different story. And that's the same with a lot of trends. If you look about AI, people are saying AI is so easy now, we can just deploy it, and it's cost less than everything, and there's so much adoption. But people have to realize that in the back of all the investment the institutions have done on their cloud infrastructure, data centers, data quality, it has enabled AI to be so quick in the adoption. But if we would have told them 10 years ago, you know what, you're doing that for AI, maybe we wouldn't be in this situation today. So there's a pace, there's a rhythm, there are progress, and we need to basically, and that's our role as an FMI, to basically progress forward, but at the same time manage some expectation, like you will not solve regulatory or national securities law problem by having a common infrastructure.
And we haven't even mentioned the fact that there isn't a real usable cash component on chain on a global basis, right? So, once that comes along too, or once there's something that can serve in that as that purpose, then that also just helps with the broader adoption.
I think the cash element is super important to the adoption. I think we're definitely going to see a change over the coming 36 months. So, I'm going to change subject ever so slightly, but hopefully in line with the conversation. If we look at the asset classes that are being tokenized, we saw some very early innovation around real-world assets. There's a lot of assets sitting outside of mainstream capital markets that we're very much looking forward to getting our hands on, and we're very excited about. So RWAs, there's a wide variety of RWAs, and some of them are things we would want to invest in and have wanted to invest in for a long time. And the analogy that I make is, it's like the man on the street walking down the street and having the opportunity for the first time ever of owning a shard of the shard. That's in the UK. But it does allow for the democratization of some fairly complex assets that then can be made available. More recently, we've seen a lot of tokenization around collateral. You've seen some really successful collateral mobility projects, both within exchange groups, and I know Euroclear were one of the original custodians to HQLX, so you've been involved in that from the very beginning. And now, of course, we're seeing quite a lot of activity in the fund tokenization space. So my question is, and I know it's a very different question for all of you, is, if you look at the asset classes that are very popular at the moment, what does that mean to you as an organization, and where do you see your organization developing in relation to those asset classes? And I'm going to start with Jorgen.
So I would start by saying that we have 40 trillion of assets under custody, but they don't belong to us. So if we don't get the client to instruct us to move an asset to another place, you can tokenize it, untokenize it. That wouldn't change much to the story. So we have to realize that you have the technical capabilities, and imagine everything would work. You still have to have a client instructing you to move your collateral or your asset from point A to point B, and that's not massive today. And so we have to have a balancing act between the new opportunities and the huge stock that we have that belongs to our clients, and to see how we can make it move. And most of us are fully aware that today most of the platforms are not revenue generating. It's a challenge. But then you need to create the different kind of use cases that would act like a layer cake to actually make it break even at some point. And this is the moment you will be able just to fund the journey in a more efficient way while unlocking the value and allowing people, people should, we are an infrastructure. We build highways. But because the technology is so affordable, everyone wants to build a highway. But it doesn't work that way. I would be happy to have different kind of roads, but it's not a highway. So people should build cars, highways, and parking spaces, and a lot of services on the highway. And eventually you get a toll and make some money out of it. But until the moment you figure out what you're trying to build, and what's your nature, and if you can actually win there, and how we can cooperate together, I'm asset class agnostic.
Yeah, it's a great place to be, right? Because I think you've got to go with where the demand's going to be. But you've got some very significant infrastructure you've already built, which hopefully you can leverage going forward. So Tom, from your perspective, what asset classes are important to you, and where do you see your growth?
Yeah, this question is actually extremely important because even going back to some of the other questions we were answering earlier, I believe it's the buy side that's really going to drive everything. So if there's a demand for what's being provided, if there's a demand for the global liquidity, for example, then that will drive the regulators and will drive the technical folks to actually come up with solutions. As you've probably no doubt heard before, blockchain, one of the criticisms, it's a solution that's looking for a problem. So of course we're trying to avoid this, and I think very key in that space is the buy side. If we're providing asset classes to them, or if we're providing services such as collateralization to them of their investments, I think the investor at the end of the day isn't necessarily going to care that it's a digital asset. I'm going to care, is this an asset class that actually provides some return for me, or is there something else I can do with it, such as secondary markets or collateralization and so forth. So that being said, again, historically, in recent years, we've tried to test the markets with institutions and institutional investors on what kind of asset classes might be of interest. And there you also start to see maybe segmentation of the different markets. It might be the case that, for example, if I'm a very large institution, a Goldman or what have you, I really don't have any interest in this sort of thing at all. Maybe I'm looking at ETFs or Bitcoin derivatives or something like that to offer to my clients, and I'll just take cut of my transactions. On the other hand, maybe the mid-tier investor, your accredited investors, your family offices, things like that, might have an appetite for a little bit more risk and a little bit more return. So that if you're talking about tokenization of real estate, for example, in developing markets, that's maybe something I want to round out my portfolio, or maybe at the riskier end of my portfolio. So it's really understanding what those kinds of, understanding what your end market is and what that investor might be looking for to help drive that adoption. So again, with SBI Digital Markets, we've kind of been kicking the tires on a couple things. Like, okay, yeah, the tokenized bond, since we're not really playing to retail consumers, there doesn't seem much interest in that. Tokenized real estate, yes, to some extent, depends what you're talking about. Tokenized revenue streams, tokenized intellectual property as a revenue stream. These are suddenly interesting asset classes that weren't really available before. The tokenization of real-world assets, it depends on what asset you're talking about, and again, what market you're talking about. So as we've seen, it depends on who we're talking to and what their interest is. But that's really, in the end, that's what the commercial team will tell me to do, which, okay, this means I need to plug into Koki's exchange, and I need to be able then to have a secondary market over here and have some integration between that across potential DLTs.
Koki, from your point of view, asset class coverage?
Certainly, thanks. So I run an exchange. So for me, very importantly, we need to have collateral for our members who are trading derivatives on our platform. For the life cycle of it, we need to margin, and therefore we would like to receive either cash or non-cash collateral from our members. Now, as assets move on-chain, obviously we look for the highly liquid and high-quality assets like money market funds on US Treasuries, for example. Immediately that comes to mind. And then this is on-chain, represented on-chain and available to us, especially if it's in our custody. Longer term, we look to expand that range of eligible collateral to also include non-US treasuries, for example, maybe hard real-world assets that are digitalized and tokenized, and maybe even sitting off exchange, because a lot of members would prefer the collateral to sit where the custodians, in their preferred custodians, right, rather than send it to an exchange. And that's when Chainlink solution might help with us building interoperability with other blockchains to make sure that we can monitor collateral sitting on another chain, able to value it real time, able to take possession and liquidate if the members default on our platform. Yeah.
Angie, can I ask one answer?
Yeah, sure.
Or contribute one thing here? If I was an FMI, I would be looking at what the current market structure change is that's going on. And I'm going to bring up T1 again just because it's an easy one. But on the back of T1, what effectively has changed that tokenization or smart contracts, digital assets could potentially enable? And so securities financing, when there's only one jurisdiction that has T1 but others do not, like, is there something with the recalls and the effectively substituting your collateral that could be done a little bit more effectively for that? What about the money market funds that are being tokenized right now, in lieu of a stable coin or some other form of cash asset on chain? Can those be used as a collateral? So should FMIs be looking at potentially, how could they potentially use that as a form of collateral or accept that as a form of collateral? So for me, it's looking at those, look at the market structure that's going on globally and thinking about, hey, what's an unintended consequence of this change, and how could we potentially solve for that in the future?
I totally agree. And I just wanted to ask one last question very quickly of everybody in just a few words. What's the most important thing that you'd like to see we're out of time, so in the coming sort of 6 to 12 months, that you think would help us to drive adoption as an industry? I'll just start with Koki first.
I think the technology is there. So it's all about the ecosystem, getting movers and shakers to participate in this equation. I like to see the community, regulators, stakeholders, ourselves getting into solutions and really working on it. So evolution. Yeah.
Tom?
I would like to see the emergence of DLT-based networks that are very specific to financial services. I don't think a single global blockchain like Ethereum is really the correct answer for regulated financial markets. I think the development of one or more multiple networks, almost like a SWIFT network, that are interoperable is really what's key to drive this forward.
That's a great answer, by the way, because that's where we come in, because we can glue it all together. Jorgen?
I would say focus. When you see everything we are able to achieve when we come together and we focus on solving one problem at a time, that actually helps things and the market to progress. If we're all trying to fix a small thing and not communicating enough amongst us, this is where we lose momentum, so focus.
Jennifer, US perspective.
So I'd say in the US, we've got a lot of other challenges besides just focusing and doing some of the things that have been mentioned here. But I do think that find value, think about how in the meantime, what you might need as an organization. So I'm going to go with interoperability and connectivity, even between your existing assets and your future assets. Maybe you start thinking about how you bring those together in the meantime.
Yeah, I think interoperability is a really big question that needs to be resolved. We're very happy to be helping with that, with everybody on this panel. And I think there's some other questions as well around data and synchronization, but we can talk about those another time. I'm sorry we're out of time. We didn't manage to cover everything. It was marvelous, and I thank all of my panelists for joining us. It was a marvelous group, and I really enjoyed being with you. So thank you very much. Thank you.
Thank you.
Thank you.